Okay, welcome again, everybody. My name is Joey, founder and creator of myatmm.com or myatthemoneymachine.com. Um, as you can see on the screen, this is a disclaimer. This is not investment advice. This is just educational, entertainment purposes only. Just mainly trying to walk through my, routine of how I use the software to manage my stock option portfolio. So in any case, let's go ahead and get to it so we can go ahead and close this disclaimer down. All right, so stocks kind of went down today, so as you can see, the overall loss kind of tanked, but that's to be expected as stocks go up and down. Again, we're cash flow, or I'm a cash flow investor, so I'm only looking for the cash flow premium. Stocks are going to fluctuate up and down as that happens. It's to be expected overall in the long run. Obviously, we want this number to be green and stay green, but we're kind of early in this portfolio, so at the very beginning it's going to be negative, or at least that's just been my experience thus far with this portfolio. In any case, okay. So getting on, we placed a bunch of trades yesterday, and most of them executed. I had to come through and doctor up a couple of them to get them to go through. Didn't get quite the premium I wanted to on like 3 or 4 of them, so I had to settle for a lower amount, but they are all still working for me, bringing in cash flow, so that is good. So what I wanted to show you is I use this tool. It's called the Robinhood Transaction History Downloader. You can actually just search for that on Google and find the Chrome extension to download and install it. This is what I use to basically go to my history, and then I download a CSV of the transactions that have occurred recently, because Robinhood just doesn't have a really good way to see all this information at a glance, and you're going to see the spreadsheet that I'm talking about that it downloads and makes it really easy to come into the myatthemoneymachine.com and enter the option premiums for to calculate the cost basis. So in any case, I'm not going to click it here because for privacy, it's going to show account information that I don't want to appear on the screen. So in any case, let me go. I've already pre-done this and got the spreadsheet here. So let me go ahead and pull that over, just double checking it. Yep, and there is some stuff on here I don't want to appear. So let me just do this. Yeah, this should be good. Okay, we can go through it like this. All right, so first thing I want to do is I look at the spreadsheet. These are the trades that came in. Let me just check the dates. 11/21. This one's from 11/18. I think this one has already been recorded. We can go in there and check it. So coming back to the My At the Money Machine, we come over here. We go to the cost basis, and I'm actually going to. Okay, sorry about that. We're going to go ahead and get back to this. All right, so what did I want to check? I wanted to check CLOV or CLOV. So let's come to CLOV. And we want to just see if this 11/18 was taken care of as a $4 premium. Did I already track it? Yes, I did. I tracked it right here. Okay, so we don't need to do that one anymore. So let's go ahead and delete that. All right. Let's see. So see, these are kind of out of order, and it makes it a little more complicated to do. So I'm just gonna do some rearranging here. Yeah, do that. Gonna sort. All right, so there. It just groups the symbols together, makes it a little bit easier to deal with. And we're sticking on CLOV, so that's good. So CLOV. So what executed here? We sold a call and we sold a put. So let's go ahead and enter the put first. The put's not represented in here. So we did a put. Let's enter a new position. It executed today. We sold to open. We sold to open a put. We did, I think, 1 contract. Nope, that was 2 contracts. 2 contracts. And it was for, the strike price was $1 and the price was 2 cents. $1.02 premiums $4. Yep, so that's good. So go ahead and click save. Oh yeah, we didn't set the expiration date. Well, that's nice to know. All right, and the expiration date is December 2nd, so that's next Friday. Okay, so now we're good to go. Click save. There we go. That worked out good. Okay, it moved it down here. I'm gonna click that and then save it to retain it. And something I didn't show you, as it's adding it down here, you'll notice the cost basis go down. Didn't get to see that with that one, but when I enter the call, we should be able to see it. So I'm gonna go and delete this. All right, so now we're gonna enter a call. See, there's already one call in here, so this is the other 3 contracts. So let's go ahead and do new position, sold to open, a call, 3 contracts. I'm pretty sure this one's expiring on December 2nd. Let's go back over here. Yep, December 2nd. The strike price is $2 for the call. And the price we got, just a penny. So that's $3 total. There we go. So click save. Okay, so you'll notice it's $1.80 up here right now, and the credits is $83.31. As soon as we move this down and click save, you'll notice, see it dropped down to $1.79 and the credits went up. So it's calculating all of this for us. Something else to keep in mind is we entered that put contract right here, but we did not allocate or account for the number of shares it would bring everything up to and the collateral that would be part of that. So this would be 200 more shares. So let's go ahead and just bump this up to 600 shares. And the collateral for that, the strike price is $1, so that'd be $200. And we do that so it actually refactors the cost basis based off that, if that put that was actually fire. And if it doesn't, if it just expires worthless, we come back and we undo it. It's just a way to show us what the cost basis could be based off of all of our positions that are out there. All right, so that's Clove. So let's delete that. All right, so now we're at Grab. So go to Grab. And something else that I didn't show you before, and I'm actually going to go away from the screen and come back to it so I can show you this real quick, is on the dashboard we have this Premiums tab here. And in the Premiums tab, it groups month by year and shows you the total premiums received for the month. And I like to look at it beforehand and then go in and collect all the premiums, enter them in the cost basis, and then come back here and just see that number is bigger. It's, you know, just cool to see. So anyway, right now it's at $12.90. So let's go ahead and go back to cost basis, come back to Grab, pick up where we left off. All right, so this is a two put contracts to expire the 25th of November. All right, so click a new position, sold to open, a put, 2 contracts. I think we said it expires November 25th. Okay, strike price is $3 and the price is a nickel. All right, so 3.05, so $10. Yep, that's what we got. All right, so click save, put it down there, click save, and by the way, you'll see this happening on the screen. Now this is a put for 2 contracts, so let's go ahead and enter the 200 shares, and strike price 300 each, so that's 600 collateral total. Brings us cost basis up to that. We're going to click save and watch this number go down when we do it. See, takes it down 5 cents for each one, so that's kind of cool to see. The cost basis continually drop. Okay, so Grab is done, and I think I already clicked save here, but it doesn't hurt to click it again. All right, so MO, we sold a call. Yeah, this was a very pathetic call. I only got $1 for it because it's so far out of the money. All right, so this sold to open. We sold to open a call, 1 contract, and I'm pretty sure it does expire this Friday. Very short week this week. Yep, and strike price is 46, so we'd still get our price for it. Sold it for $1. Save. Okay. And then click save. So it just went down a penny, no big deal there. Some people probably even speculate why even bother with this. I bother with it for just practice, really. And I'm not in the stock for capital gains, so if I got out of it 46, that'd be great because, like I said before, I want to take this money and move it elsewhere. So that's why I continue to play, whether it's a dollar or whatever the premium I can get for it is, and still be safe to sell it at that. Okay, so MVIS. What did we get for MVIS? So we got a put and a call here, so let's go ahead and do the put first. So sold to open, a put. Can't remember how many contracts. We did 2 contracts, and it expires on the 25th. Had to go out a week or 2 on some of these because the price was so low for the premiums. All right, so $3 strike price, 6 cents each. So we collected some premium on that one. That was pretty good. That's why, yeah, okay. All right, so this is a call, $3 call, $12. So we're good to go there. $3.69 is the current cost basis, and it dropped down to $3.63, so that's nice. Making a little progress. All right, so now we got to put it, oh, this is the put contract, so we need to make sure to account for that. So 2 at 3 at $600. Okay, and now let's enter our call. Sold to open a call. Did we do, I think we did 2. Yeah, 2 contracts. Expires December 2nd, $4 call. The price is a penny. So not much action on that one, but I am getting to play both sides. So one of them is definitely 100% a winner, and the other one may or may not get called. So no big deal. Record that. Save it, I mean. Okay. There's MVIS down. Okay, now we're to NVAX. NVAX. So we did a $19 put. So let's enter a new position. Sold to open. Put. 1 contract. I think I did it for the 25th. I did. The strike price is 19, and I got 85 cents for that. So that, what did I say? Did I say the strike price is 19? 19 and $85 is what we got for that. So that one, first nice size premium. Okay, and that'll pull our cost basis down a good amount, almost $1. Okay, so get rid of that, and we do want to go ahead and account for that, so that's going to take our shares up to 300, and the collateral we had to put up for that was $1,900. Click save. All right, and we did sell a call in here as well for 2 of them. So sold to open a call, 2 contracts. Pretty sure I did it on the 25th. We'll double check. Yep, the 25th. The strike price is 26 because that was our break even. But as you can tell, if our put executed, our cost basis actually dropped down 23, so we'd actually come out way ahead. But like I said, it's only going to happen for one of them. Either the 26 is going to hit or the put's going to hit, not both of them, because the stock can only go one direction in a week. All right, so where were we at? We're at 26 here for the call, and we got 2 cents for that. So not a big amount of premium, but it's something. Better than nothing, right? Okay. And we need to move that down and then click save. So it's recorded. So all this is recorded. So we're golden. And look, if that put executes, it'll pull us down to 28.26 a share. And we were only able to sell at 26 before. So see, we're pulling this down, and we're getting our cost basis without premium to a lower number, so we can actually start selling calls that might be worth more premium than, what we're struggling with right now. Yes, it does involve putting some more money into the stock, but I mean, if you're going to sit on the stock anyway, you might as well go ahead and put some more money into it to pull the cost basis down, so you can actually start selling some premium. And if the amount ever comes back up to where you had originally got in, you'll make a huge amount of profit. And that's even if you hung in for that long. Chances are you wouldn't hang in for that long. You would just try and get a little bit above your total cost basis, because by that time you would have collected all this premium and you would have gotten all of your money back out. So I think that's a win-win, and it's a way to not have to wait for the market to turn back around. It's a way basically to get it's just another form of dollar cost averaging, honestly. You just are getting paid to get into the stock to pull the cost basis down. So that's the way I like to play it, even though it does involve putting more money into the stock that's technically a falling stock, but you're just pulling your total cost basis down with you to allow you to sell calls for more premium, as opposed to having to chase it down and risk getting called out on your positions, which I think is a worse scenario to get into, because you can definitely lose a lot of money that way. All right. And really the only risk here is if the company went out of business and it went down to zero. I mean, that's really the only risk as far as ever getting any of your money back. As long as it doesn't go out of business and it keeps on fluctuating in price, this strategy I think will work beautifully. Time will tell, right? So, okay, make sure that's saved. And I did record both of those, so we're good on NVAX, right? Yep. So go ahead and delete that. All right, so now on to rig. It's in alphabetical order. All right. So we entered a put position. I think we did 2 contracts for November 25th. Strike price $4. And look at that, we did 11 cents per, so that's nice. So we got some good premium on those. All right, so click save. And so let's go ahead and enter our collateral. It's 400 to 800. So click save and move this down. Click save here. Okay, so see, we had previously gotten into this trade and gotten out of it. So see, even if we did execute here, we would be in it, but we'd still be in it for 415. And that's with accounting the premium. Otherwise it'd be 470. So we'll have some puts and calls to be playing there on both sides to whittle that down and get that down to a better number. So any case, so that's rig, get rid of that. I think I click save on this, but like I said, it doesn't hurt to do it again just to make sure your information is saved. All right, so rum, we had we had quite a lot of action going on in this one. Because it didn't execute at all my prices, so I had to split them and do partials. Like it executed, it only filled like half of it, so I had to play around to get the other one to execute. Okay, so let's just start off at the beginning. So we did a put for $10 expiring the 25th. So sold to open a put. I think there was just one. We'll just double check it. Did it close on, yeah, the 5th, 25th. It's $10 put, and there was only one. Strike price is 10. I got 95 cents for that, so this was a good one, a really good one. Okay, we'll go ahead and move that down and save it. All right, so we'll come back and do the collateral calculations after I get all these positions entered. So, and actually, you can actually go ahead and add, I know I got to add 3 more, so I can go ahead and just put that as placeholders. So sold to open, a call, 1. I'm pretty sure all these are 1s. Yeah, all these are 1s, so that makes it a little bit easier. Expiration on this one, see, I had to go out a week on some of the, or 2 weeks on some of these. So 1250, so strike on that. That's what makes this software pretty nice to have, because you can have all sorts of variations of this stuff going on, and it just calculates everything for you, so you don't have to do some mess of a transaction or mess of a calculation and get all confused with it. It does it all for you, which makes it really nice. Okay, so 1250. Because as you can see, I mean, I've done this several times, and it's still a little tedious to come through here and make sure I get it entered just right, which makes the rest of the calculations all that much better. All right, so we did it for $10. Double check. Yep. All right, click save there. Move that down, click save. Okay. Got 2 more to go. So this one was a $13 call on the 25th. 25th, $13 call. And let's see here, price 105. So yeah, we got $5 for that one. Remember, Rumble or Rum only moves in nickel increments. That's why the numbers are like that and not some oddball number. That's actually kind of what made it hard to get it filled too. And I trade Rumble because I like Rumble. Always a fan of free speech. So in any case, all right, sold to open. I think this was a put, right? Yeah, a put expires November 25th. We did one of them. Okay, strike price is $8 on this one, 15 cents. Yep. Okay, so move that down, click save on that. All right, so we are golden. So now I've done all of those, so I can pull this off to the side. I don't have to worry about that anymore. Okay, now something else I wanted to say is Robinhood, it gives you that transaction history. However, I don't know if you guys have used Robinhood a lot in the past or not, but if you go to the account history and you expand one of the position sizes or positions that executed, a day after they executed, like the following business day, they have the trade confirmation that you can click on, and it's actually a PDF that you can download. And if you've ever looked at those things, these numbers are actually wrong. It actually takes some fees out, like 2 cents here, 3 cents there, depends on the size and how many contracts you did. It probably even takes even more when you get into like 10 contracts at a time or 20 contracts at a time. I haven't gotten up that high, so I don't know for sure, but I'm almost certain they do that. It's like a penny or 2 pennies per contract or something. So anyway, these numbers are not accurate. So I mean, even though you spend all this time to go through here and monitor this and manage all this, you do end up having to download those PDFs and then go back through each one of those and come in here and it's not right here, but down here, these numbers. So this one might end up being $14.98. So the application has a way you could just click edit, change the number to $14.98, and then click save, and then it'll retain that new number. So it's kind of like I come back the day after, the business day after these trades execute, and come back in here and change all these. And you can see it's actually been a little while since I've done it, so I need to get in there and find those out and come back in here and edit all these. But you can see back here where I had done them, where I had changed the numbers, because and it only does it when you're getting money. Like when you're spending money, it doesn't do it, but when you're getting money, it does take the fees. All right, so anyway, we have come through here and added all of the, by the way, after all those position sizes and positions were added, by the way, I need to add the collateral, don't I? Yep, see, because I have no collateral. I have 200 shares owned, and I have 2 puts in play here, but I did not account for the collateral, so that increases our shares to 400. I may split these out someday to have the put shares and the stock shares, but right now they're one number for now. I have thought about doing that. Might make it a little bit easier to separate. So in any case, so that's $1,000 worth of collateral, and that's $800 worth of collateral. So $1,800 total collateral. All right, and click save. So as you can see, if all these positions, obviously all these positions aren't going to execute, but if the puts executed, like if it tanked and went down, then my overall would be 11 without premium. And you can see I've collected $1,000 in premium already on this stock. With the premium added in, my cost basis would be 831. So in any case, I'm shooting for these numbers. I will admit, earlier in this process, I was targeting this one, and I don't know why it didn't occur to me at the time, but basically, if you're targeting this number when you're setting your calls and puts, you're really just looking for break-even trades, because that's what that would be. If you stayed around that number whenever you got called out of your position, you would basically be in a break-even trade, which is why my overall was always so close to zero. It would pop into the green, and then it'd pop into the negative, and then it'd pop into the green, pop into the negative. And that's because I was targeting this number, cost basis with premium. It didn't occur to me that that's what was going on. It should have. I don't know what I was thinking. In any case, if you target this number, that's when you will basically be pocketing this, which is the whole idea, pocketing all the premium, and then shooting for that number to be called out on, because then the stock cost will break even, but you'll keep all the premium. And that's I think what the ultimate goal should be, or it is for me in any case. So all that's been entered. So now let's go back to the dashboard real quick. You'll notice that the overall went down because we collected some premium. So it was 1,000 something, but it's accounted for the premium that we just added, so it went down some, so that's cool. Something else to notice is after you get done entering all your positions for the week, or for whatever time period you're dealing with, you can tell that this should be a low number. This basically tells you how much of the capital that you've put in is not being used. And I want this number, I want pretty much all my money to be working for me as much as possible anyway. So you want this number to be low to let you know that, hey, you're not using, or this is, the amount of capital that you're using of your stock portfolio. So that's a way to keep me accountable that I'm, making the most of the capital that I have in the portfolio. And again, this breaks down the individual stocks and what percentage of the entire portfolio each one of these makes up. So, like seeing all the greens, of course, and the red ones are big numbers, so we have a lot to work with here to correct these over time. Okay, but what I wanted to show you in here is the premiums tab. Originally, I think it's $1,200. So this was $1,200 before I started, and now it's up to $1,551. So that's good. It looks like we're a little bit ahead of October for premium received. So that's always fun to see. But in any case, I'm going to go ahead and call this recording. Pretty much covered everything I wanted to. I just wanted to show you guys how to take the transactions or option orders that were placed yesterday after they've executed, entering them into the web application in order to see your new realized cost basis. And something else on this positions thing, it actually does have the cost basis on here too. The basis now is the cost basis including the premiums you've received, and the basis start is the cost basis without the premiums included. So you can actually see all of them together right here in this one list, this ongoing list, so you can keep track of that as well. And I always put this principal left in red just so I can tell, ideally most of this red number is stock value, meaning the price of the stock times the number of shares you have. Ideally, a lot of this will be that number. And I keep them all red because it lets me know that that's a number that can fluctuate. It could, if the stock went to zero, that is a potential full loss right there. I could lose $4,500. That's at stake, basically. Now, if the stock goes down to 440 and I sell, I get 4,000 back. So obviously this number would only be 557. So, and then it'd be 557 and account for credits and stuff. So that's what the number plays out to be. This principal left is deducting the credits. So ideally, if you've been in a stock so long, you've collected so much premium, that it kind of outweighs the price of the stock that you're at. So it won't be showing principal left here at all. It'll actually be showing over here in green because you're so far ahead of the cost of the stock and premiums that you've received. Basically, you have the stock for free is essentially what that means at that point. But you'd have to be in a stock for quite a while to reach that point. And that's kind of the idea to do that. So in any case, again, fun recording. I will probably do another one this coming Sunday when all the dust settles from this week's transactions, and we will do another weekly review, and we will keep on going. Have a good day. Bye.